let's jump back into the trend picture. And what do we have? Welcome back, guys. All right. So, you guys know we're trying to change our lives, trying to take ownership of ourselves in this year and age. And this is Trend Following with Tyson. So let's get into something special I got from Mark Minervini, and this is going to totally equivalate into what we're dealing with earnings right now. As you guys know, we hit a major home run on SVU last week. Trend following on that thing, and so things are looking lovely right now. And we're just gonna keep trading what we have, okay? All right, we're gonna keep taking the signals. You guys know from the last show last week, it's all about taking the signals. You cannot afford to miss a signal, because if you miss a signal on a trend, that trend could possibly pay for many losers, and it could possibly be the biggest win of the whole year. So it's very important to missing a signal is important. I was listening to some audio from Michael Vill, and they were talking about some turtle traders, and it was talking about Jerry Parker and how he was trading for Richard Dennis when they had the whole turtle trading thing going on. And Richard Dennis said, "How'd you do this week?" And Jerry said, "Okay, I did fine." He said, "How many trades did you take?" And he said, "I took about 5 or 7 or so like that." When he said, "Well, how many trades should you have took it?" He said, "Well, I probably should have took 25. He said, "Okay, don't worry about it, but take the trades." Like, in other words, like, don't do that. Like, that's a huge mistake. Like, in other words, like, listen here, dude, like, stop kidding around and take the trades, okay? You get it? Like, don't do that. Take the trades, all right? Jerry Parker was like, okay. So he started taking the trades. So if Richard Dennis told Jerry Parker, take the trade, back in the office when turtle trading was barely going on, back in the 80s, I think it was, okay? Then how important is that today? To take the trade, not missing a trade. Okay? I missed an entry on NIHD and I paid for it. I missed an entry around 4 and I had to make an entry around 5 and I only got 80 cents out of that move, okay, before it started drawing back, and I had to take profit. Okay? When I should have had almost 2 points. Okay? So take the trade. All right, and now let's go back into the earnings. So since we're in the middle of peak, so-called quote-unquote in the peak of earnings season, a lot of people ask me, how do I trade during the earnings thing and such and forth? I do not shake out of my positions because it's earnings season. Like, if I have a portfolio of 7 trends I'm following, okay, I'm not going to take all the weight out of all those trends just because it's earnings season. I'm only displacing weight and taking signals based on what those stocks are doing. So I'm long NIHD right now. I took some profits. I knocked 70% of my position off the table. I want to see what that stock, if that stock's going to continue to pull back. Maybe I can buy it cheaper than 540. Maybe I can buy it at 5 before it takes its rally back up and knocks over 6 and 7 and such forth, or before it goes on its next uptrend. Okay? A lot of other stocks I'm long on that I have no idea when the earnings are coming or any of that. I just don't. I don't read news. I just trade only the price. Okay? So bought MTRN on 724, added to our positions, held through earnings, got a nice pop, still holding. So added through earnings, held through earnings, got a nice pop, and still holding through. All right, that's from one of the greatest traders of all time, right? That's from one of the greatest traders of our current time right now. Okay, Mark Minervini, trading champion. Okay, all right. Let's pick up. Let's finish off his tweet, and just so you guys know, I got permission to use this tweet from Mr. Minervini. I didn't just go take his tweet and like, oh, I'm gonna use this. Like, I asked and got permission before I used his tweet. I'm not going to go and show you and all that kind of stuff. But just know that I got permission to use this tweet, okay? So everything influences how I trade around earnings. But remember, it's not about being right all the time. Just making more when you're right than you lose when you're wrong. Everything influences how Mark trades around earnings time. That could be not being as heavy in positions. That can be being more vigilant inside of earnings, watching prices. But you just heard him say he holds and trades through earnings, though. And he added through earnings. So rather he was vigilant or not, even though he's saying everything is influencing how he's trading inside of earnings, he still added inside of an earnings position, held through it, and then still held through that. And it's about making more. It's not about being right all the time. Just making more when you're right than you lose when you're wrong. And you guys know that here. Cut your losses very quickly when they reach your max loss limit, or when the trend has met the part in the chart where it says to cut profits. In this point in time, and especially in this time with stocks being so shaky, just take profits when top profits say it's time to take them. Okay? Based on a pullback, whatever the case may be. Okay? Based on an ATR, whatever the case may be. So make sure you're making more when you win. Okay? Make sure those wins are big and those losses are small. I've showed you that on very many occasions on this show. Okay? From my own personal type of, like, so to speak, portfolio. Okay? So let's jump into the trend picture. Thank you, Mr. Minervini, for letting me use your quote, as I just wanted to point out some aspects inside of earnings that everyone that's so spooked out and they like give me a hard time about, hey, and you're trading through earnings, this and that. Like, you just heard a professional say that he trades through earnings and holds and manages positions and such, okay? So get with the program. All right, so ENDP, let's roll. ENDP, we were watching this for continuation this week, and we got that, just like we do with all our moves. Just about 75% of the stocks we look at and the trends we look at here, they almost always continue. Almost always. They may have some pullback, and then when those pullbacks are done, cut, let's say, protect your profits inside these pullbacks, inside these major pullbacks, not in these little pullbacks like these. There's nothing to protect here. You just sit inside this and let this play out. I'm talking about pullbacks that are way outside of their norm. Like, if this stock was to pull back right now to 1150, that would be a pullback outside of its normal pullbacks right now. Because these last pullbacks were here. The last pullbacks were here. Okay? And so far, we're just kind of, I can set you a trend line on that five day just going up here. And now we're wedging right now on this 5 day. You see the top hitting, top hitting here. So here's the top. See my little white line, riveted line? That's the top, this area here. And then the trend line is prices are tightening up. This may pop to the upside. I like a long on this right now for the pop above this. Set your stop below, let's say 1180, 1175, between 1180 and 11, because it shouldn't bounce below here. But this thing looks, you see prices tightening up, so look for a bounce on the ENDP, okay? All right. NIHD, this is what we're long on right now. This is what we're long on because we like the upside the chart showing. We've hit tons of home runs on here like that, guys. Tons of home runs on here by looking at what the chart shows on the upside and kind of trading to see if we can get that, okay? All right, so NIHD was a long, of course, and look how much it's done since then. Of course, we took it here. All right, pull back. You guys know the story with this thing. We haven't just started trading it. I know a lot of people on the markets are barely trading NIHD. This is what I say about this trend following process. We're getting long before everyone else. I know there's tons. I know NIHD's ringing hundreds of ears on the market right now. But this thing's been ringing our ears a year ago, 6-8 months ago. We've been long on this. By taking the signals of the higher highs and lows, the rounding bottoms, all the signals we take, all right, that are trend following signals, okay? So look at this thing on the 3-month. All right, you see the pullback here, guys? We hit 6, and like I told you guys, I let it come and trade up here, and I said if it bounces below this, I'm done. And we started closing, and I took my profits. Okay? So I missed this pop here that I told you guys. I missed this round, quick little round, and I said on the first green to get long. I missed this, but I ended up getting long inside of this area here and rolled it up through here and started taking profits when we pulled back. Now, when this thing, I don't know how far this is going to pull back. As you see, prices starting to just a tiny bit round here. Soon as this thing goes green and covers 560, we can go take entries back long and set our stop here. This is what whipsawing is all about. You get whipsawed. You know what? You just have to get whipsawed. That's the price of doing business. So we're looking for NIHD to continue and enjoy that run back up through 6 and for it to continue this rounding pattern here. You guys saw it a million times. It's not like I'm making this up. So anybody else who's like, this guy is crazy, like, okay, right. Go back and check how many successful trends that we followed in this manner using this very same process. Near 100 points, almost 100 points. And soon I'm gonna tally up all those points we calculated. A damn lot. Let me check something here. Sometimes my screen gets messed up. Okay, the screen's fine. We counted up a lot of points here. Over 50. Damn well over 50 points. I'm talking about points. From 2 to 3. From 3 to 4. That's 2 points. From 2 to 3. That's 1 point. We've counted up over 50 points on this doggone show. So don't tell me crap about hitting home runs, because we've been doing it. Don't tell me crap about this process we're following, because it's been showing for itself. It's a trend following process. Duh. Here we go with ENPH, guys. Look at this chart. It covers up higher highs. I told everyone this about this chart. I said it rounds up, pulls back, rounds up, pulls back. Here it's pulling back here. Look at all these beautiful buys. If you just bought it and let the chart perform its duty, these were wins. Look at this pull back to 4 here. Traded up to 560, pulled back to $4, rounded up way over past its last higher high, which was 560. Okay? Rallied up here to 650, pulled back to 450. Rallied way above the 650, came to 750, rallied here to 550. This may be the damn gone buy spot to go back for the next rally. This isn't fucking rocket science. We're not building rockets here. Alright? ENPH long. I like it. For continuation. To continue this rounding bottom on the 5-year time frame. Right here. Never know if this thing's going to never know if this whole structure is going to keep doing this until it gets up here. This is a little bit more volatile in the pullback than it has been, but it's still pullback. This pullback here may look like this in 2 weeks. See this red candle? See this pullback? It may look like this one right here in 2 weeks. I'm betting on it. Okay? I'm betting for this thing to continue as it has been. All right? Earnings coming up in another month might push this thing up to 1250. Up here. You saw TNDM. It rounded and covered a whole chart. On a yearly, though. Look at this yearly. All right? So follow the strength on the NPH. Wait for that green. Wait for that strength to come back. Follow that chart, okay? See, I know I'm getting a little slow here. Let me move quickly now. Damn it, what is this? CEMEX. This is what I want right here. CEMEX, here it is. I like CEMEX long, guys. Ton of market cap. I like for this rounding structure to continue. You guys know all about it. On the 1-year time frame, jumping over the 200-day moving average. I know it looks like this, and it looks like these aren't really moving, but it's definitely on. We saw it on SVU. This is not the same pull. This is not the same downtrend. Okay, major pull up here, downtrend, downtrend, downtrend. Major pull up here, pullback, and now we're up. I love this thing for continuation. To just for these prices to keep rallying. We've hit the 200-day moving average on a 1-year time frame, and we crossed above it. Business as usual, all right? I like a stop on this thing below this candle here. This part here, I like for it to hold that 1375. Okay, give your space on these bigger moves, on these bigger stocks, on these bigger points. Give yourself some space on your stops. So I like CEMX to continue. Business as usual here. You know, ride these home runs. Give them time to play out. Okay, here we are bouncing here, holding all this. Look, stock gapped up right there. If anybody was trading this, you enjoyed a gap up here, and now strength is just continuing here. So, bam, man. I love CEMEX right now. Whew. Beautiful thing right there on CEMEX. CERS pulling back. This is another buying opportunity. I know the market's looking real shitty right now, but if you're a trend follower, you need to be buying these pullbacks. Buying pullbacks in long-term uptrends is the default trade. We learned that from Larry Tintorelli. And we've examined it over 100 times here. Okay? CERS, here's the pullback on it. Look at all these other ones. Look at how damn strong this stock is in 1 year, man. Look at the strength here. And I looked at some systems. That's why I don't listen to too many trend following systems. I looked at some trend following systems and told me this stock is not bullish. And I said, okay, I probably won't be using this system anymore. According to you, I shouldn't be bullish on this stock. You know what? This stock is bullish as gonna get. Look at the consistency in the damn price action here. Are you shitting me? How is this stock not bullish? That's why you need to know you need to know this business. You need to know this trend following for yourself. You don't need anyone to tell you shit. Because if you need people to tell you, you're gonna be misled, and you're gonna miss out on a lot of runs here. Here's Oats resistance turning support. Here's resistance turning support here. I almost guarantee this stock's gonna hold around this area here. I don't believe it's gonna cross to 7. As strong as this stock's been. Buy this pullback, y'all. So when this thing comes green in the next, let's go to the 5-day. When this stock comes green, you start noticing a close above 740 and a close above 745 and a close above 750. Go back long or take an entry long. But in my case, I'm going to be adding here because I'm long this stock, and I still have my position. I didn't cut any of my position just because it pulled back here. This is the normal pullback inside this stock. This is where I should be adding, and I will add here depending on the behavior on this stock. Come trading sessions this week coming up, okay? Don't let a home run get out of your way just because you grow impatient. That's not trend following. You need to give these trends need time to space out. Longer trend following, not even just trend following, longer time frames is where the fucking money comes. And I know there's traders that trade, day trade, and other ways of trading. That's okay. We're trend following. You need your moves to span themselves. You need to be taking the majority. If a stock goes from 5 to 50 and you sell it at 35 or 30, you missed the run. That's not trend following, okay? FBP, I love the strength here. I love for this thing just to rally. Beautifulness on FBP. So here we are in this area. You should be buying this. All right, buying these pullbacks and just see what this stock does. I'm sure it's not a major, it doesn't cover a point a week. Or, it's not a super momentum stock, but it's just a consistent grinder. Am I lying or not? Is this not a consistent grinder? If you can see this chart, right? All right, okay. So, yes, it is. Of course it is. Very safe, in my opinion. Got a lot of market cap. Actually, in my opinion, it's cheap. That's why it's on this. You can't call stocks cheap. Let me take that back. But for a market cap above, 1 to 2 to 3 billion, you're normally going to see stocks in the $15 to $30 range, okay? FBP for continuation. Intelsat, you guys watch this for the next week and the next month coming up. Take your longs. Watch this breakout above this. See this whole thing right here? Just a fucking... look at the strength and the continuation here. My show's not going to be like everybody's because I'm me. And this is trend following, okay? So just adapt to it. Look at this. Beautiful. This is just beautiful. My God, and we got long on this thing back here. Look where it's at now. Woo! We got long on this thing back here, you guys. I remember this pop here, so it was before this because I said, damn, as soon as we bought it, it started popping. So it was around 650 and 7 because it was before this candle here. So, man, I like that thing long. Let me tell you something. This stock is just as good of a buy here as it is here. Look how good it looks right now for a buy, to break out above, for a breakout. Look at how well it's holding price right now. It's just a beautiful stock right now. I guarantee you when I take you to this 5-day, you're going to see how decent this stock looks. Okay? All right? See that? What I say when I take you to the 5-day, how decent this stock going to look. Look at this trajectory. This 2 o'clock trajectory. Just a beautiful stock. So I like this long. Don't have a really tight stop in it. Give it some room to wiggle and shake. You know, wiggle and shake. Hey, you got to wiggle and shake. Let this thing wiggle and shake, okay? I know that was horrible. Sorry, guys. Let this thing wiggle and shake. I like Intelsat for continuation, just to continue that strength and to close above 21. Jesus, that looks nice. INFY. I know I said I'd move really fast. I'm sorry. Let me speed it up. INFY for continuation. I like this thing to continue. You see the strength there. Check it out on the yearly. Wow. Well, this isn't the right one. Sorry. For anybody that's trading those type of numbers, Jesus Christ. If you bought this thing at 880 in December, this thing is worth $13.75 and still rolling. For you higher price stock guys, that INFY, that's a different INFY. But Jesus, here goes the real INFY we were getting ready to look at. Lord. Don't tell me shit about following this trajectory, this strength, guys. I advise you guys to do it too. And if anybody saw my tweet, I said I'm just a student of the greats. I listed about 20 trend followers, 20 to 30 trend followers, and all of them are successful and over $1 million, over half, $200 and something million strong. And I even forgot Kevin Bruce on that list too. Shame on me. I like INFY to continue. Look at that 5-day. Look at the strength on that damn 5-day. I mean, look at the strength there. Of course this was a buy, this 225. It's a buy right now with a stop below this. And you don't even have to risk a lot for this thing right now. 2010. Give yourself a stop below 2010 shows something's changing here. But this thing should start setting up a new higher highs now. It's evident. I mean, let's go back and look at the yearly real quick. It's evident this thing's going to start setting new higher highs. Okay? It's evident. So INFY for continuation. All right. LSCC. You guys got to take charge of your life, man. I'm going to have a show tonight. Anybody that watches this, please join us on Stock Talk Live. If you check my Twitter, join me, Stock God, Bully Bear, Bat Scientist, Rock Solid Trader, Stangum, African Emporium. We'll all be in the house like we are every Saturday night, just getting down to the business. Tonight I'm going to be covering some things on taking that damn signal and blotting this noise and not being like a computer. Like people are like programmed today, all right? So I want people to think for themselves, and we'll cover that later on Stock Talk. So check that out. That's every Saturday night. Just a bunch of traders getting together, getting to the business. Look at LSCC, guys. I like this for continuation. Just a beast. Just really good stock right now. Holding up these levels here at 750. Remember what I told you guys about when a stock gaps up and holds price. You take it long and you sit tight. The next show, or one of these next shows, I'm going to bring up Jesse Livermore, and I'm going to bring you back to him telling everyone to sit tight. And I'm not saying sit tight as a stock just fucking crashes. I'm not saying that. But I'm saying if you buy a trend and it's setting higher highs and lows and the activity is correct for that uptrend to continue, sit your ass tight. That's that. That's where the money's made, according to Jesse Livermore. And I would listen to Jesse Livermore before I even listen to any of you shitballs. I probably would take his advice first before I listen to what you have to say. Okay? No offense. No offense. No offense at all. Okay? Alright. LSCC, beautiful stock. I mean, look at the way it gapped up and held price. I like for that thing, the whole price is there, and I like a long on that. Don't tell me you don't have about 100 winners to choose from that we looked at on this show. Just because almost every stock and their dad is pulling back right now, and their grandmother is pulling back right now, don't mean you need to pussy out. Don't mean you need to trade emotional. We're not talking about emotional trading here. We're not talking about emotional trading. Emotional trading is when you don't know when you lose your game plan. I'm giving you the game plan right now because everybody's panicking. Everybody's selling their positions. No one knows what the hell to do by these damn pullbacks on these uptrends. I just told you and I showed you 100 of them on the chart. What are you talking about? I just showed you 100 pullbacks to buy. It don't matter if it's earnings. Earnings is going to go away. These uptrends are still going to continue. Now, whether you bought them when you were supposed to or not, that's a different story. MNK continuing long. I get excited. I'm sorry, but it's a lot of we're talking about. It's a lot. We're talking about a lot here. This ain't just Sunday school. This ain't just going to mop up a spiel in aisle 5 for your boss. We're talking about firing your boss. This is big business here. This is the real damn deal. And we're following the smart money. We're not following the little traders that don't know what the hell they're doing. We're following the smart money on these signals and sitting tight until we get the signal that says otherwise. And we may get whipsawed a little bit, whipped around. That's the price of doing business. But other than that, if you're not getting whipsawed, you should be sitting tight enjoying these moves. MNK for continuation. I told you guys about the 20 and the 50 crossing. There it is. And before it crossed, I told you it was going to get ready to cross. Oh my God, just go back and look at my next show if I'm freaking lying, dude. Go back and look then. Oh, this guy always said I'm sure you. Go back and look. Of course I said that. What the hell are you talking about? I just told you we've did over 75 points on this show. Over 50 points easy. On TNDM, HEAR, and Intelsat alone. That's over 50 points alone. I'm not even talking about the other stocks we hit home runs on, like SVU. 12 points, and I'm finna go there right now. Anyways, MNK long, I like for continuation. Don't tell me this process don't work. It's you that don't work. I got no time to play with nothing. Nothing. I got no time to play with nothing. I'm being serious. We got too much relying. We got too much money. We got too much signals to take. We got too much on the line to be fucking around, you guys. Now let's go. All right? I'm serious. Now, if you want to do what you're doing for the rest of your life and you're happy with that, that's okay. That's you. I'm talking to all the people that are go-getters, that are strivers, that are not the 99% of losing traders on the market. Well, I think that's a little bit over proportion. But I know this trend following, you can't be no 95%. No losers in this trend following if you're listening to the rules and sitting long inside these moves. Damn it, we've been looking at SVU way over here. Way over here. When SVU broke this, we started looking at it. Back before June, before the beginning of June. Late May, early June, when this thing broke out, that's how long SVU been on this show. That was at 18, that was at 18. Okay? And then if you rolled that, if you took the entry when we were supposed to, right? Because we were looking at it as it crossed the 200. I said, Then I did another show. I said SVU crossing the 200. There it goes. If you took that entry at 18, y'all, you rolled it up to 22, it pulled back a little bit towards $20 right here. Maybe you cut a little bit of your position out. Maybe you knocked 75%. Maybe you knocked 50% and took your profits. The rest of that position you had sitting in there, you just enjoyed a 65% gap up on SVU. Add that into the other winners with TNDM, HEAR, Intelsat. With those, what is that, 50, 60 points? Add those other 12 points into that. Don't tell me shit. You could tell me what you want. I'm not going to listen. That's SVU. Okay? Man. This just clarifies everything up right here. It just clarifies everything. Take your longs on ORC, guys. You see it rounding. We saw this structure here 100 times. I don't need to keep telling you the validation behind this. I don't need to keep yelling and all that. I know I'm starting to scare some of y'all. I'm sorry for that. But, okay, take your longs on ORC. In my opinion, of course we crossed this 200-day moving average. Of course we're going to cross it. Don't get me wrong. We came to it and denied it. We denied it here. Okay? A long on ORC. That's a no-brainer, okay? That's a no-brainer. My son knows that. My son would know that if he looked at this chart. He's like 10 years old. Okay? Come on now. So, we're curling here. This thing does look a little funky. But for the inevitable, all in all, this is an uptrend. You see? Uptrend here. Pullback. Major pullback. Uptrend here. Pullback. We never set any higher highs above this. So let's see what this stock does. Let's see if it comes up through here. Let's see what it does. It denied this 200-day moving average quite a bit. Never really got above the 200. Never really got it. This is a crucial point for this stock right now. See how it denied the 2 here? Denied the 200 here. Tried to rally back through it and denied it again. So, but these don't look like a change in sentiment. It really looks hard to change the sentiment from this point. The stock would have to close consecutively lower, lower, lower for this whole thing to continue. But then again, this whole structure may just continue. Look. Okay? I don't know. Let's wait and see what happens here. Because see all these higher highs and lows and then drops on the chart. Higher highs and lows and then drops on the chart. This stock is confused as hell right now. So just let's wait and see what happens. But look at this major key area here. If we break out above this and that, you got a lot of things going for this stock right now, you guys. You really do. You really do. And if this changes, there's a few points here on upside. All right. So ORC for continuation. I think I spent a little bit more too much time here than what I should have talking about that though. RAD. I like Rite Aid. It's over $2 billion in market cap. Same thing with SVU. Now here we go. Same thing with SVU that we saw. This is exactly how SVU was looking before we started looking at it and taking longs on it, okay? Understand the science. Now, I like this RAD to change this sentiment now. Let's see why. Okay? I like Rite Aid. I like Rite Aid. I do. I really do. I like Rite Aid to continue. Let's see if we can break out of this area. We're over the 200-day moving average, y'all. We're over the 200-day moving average. And don't get me wrong, it's been inside this area, really weird area for a while now. A long time. Over a damn year. But that's not the trading. That's not the process. The process is to trade the higher highs and lows, and to see to see if the chart's going to open up, regardless if it didn't open up back here. Regardless if it didn't open up. Oh, well, it didn't do it here. It didn't do it here. And that's regardless of that. That's not the process. It's to always look at back. Oh, well, it didn't do it here. And damn the old stuff. We're not going off of the old price action. We're going off what's going on right now. So I like RAD to break out over this. If it breaks out over this may not have anything to do with these old prices. Damn these old prices. These old prices don't mean a damn thing. How many times have we seen a stock break out of old prices out of a level like this, and then these were just like they never even existed? This is an older time frame. Don't even worry about that. Worry about getting out over this. If it can get over this, it could just damn well have enough momentum to just rally. And you don't want to miss it because you were worried about it. Not, oh, it didn't break that yet. It didn't break this yet. And it didn't break that yet. And you're going to miss this whole move because of all of this. Damn that. Take your signal. Okay? SVU did the same thing. It didn't get over all those old prices either back in the past. And we didn't say, oh, well, it didn't get over these yet. It didn't get over this yet. It didn't do this yet. We said, damn that. Look. When it broke out above this, we didn't say, oh, well, it hasn't knocked this down. And it didn't knock this down. And it didn't. No, we said, we getting long on the breakout above this. Who gives a damn about these prices back here? And then look what happened. When we broke out above this, now look. So what about all these old prices? Who gives a damn about these old prices? Look where we're at now. Understand the science. I don't care if I lose viewers and everybody's all sad. I don't care about all of that. The real people is gonna tap in and view what we doing, and then they're gonna rock. It ain't gonna be all like all the other crybaby motherfuckers that want to keep mopping in aisle 5 for the rest of their life. Y'all is gonna tune out, and that's okay. You go ahead and tune out. That's fine with me. Okay? That's fine with me. I'm not doing this for viewers, and I ain't doing this for all of that. Okay? We're just doing this because we need to look at the trend picture. And I'm not fake like everybody else. So don't, forget about all of that. This thing going to be like SVU, probably be up here next time we look at it. And everybody's going to be like, well, it didn't cross over this, and we was waiting for it to cross here, and damn that. Damn that. If you need to wait all of this, you're going to miss all the points, dude. Now, I understand waiting for it to get above this. I understand that. This is the last key, though, on the rounding structure. Let me go on the 5 real fast. So, who cares that it did this round here and came down, round here and came? Who cares about all of that? That is not the process, you guys. The process is to take these higher highs and lows and ride them out and see where they go. Okay? Now bounce back to the 1 year time frame. We approaching the 200-day moving average, and the 200 and the 20 are getting ready to cross. If we break out above this, you got a lot of things working for this stock right now. You got the 200-day moving average that we're approaching, and you got this breakout here, and you got the 20 and the 200-day getting ready. We got like 3 factors working on this long right now. Matter of fact, we got 4, because we got higher highs and lows, consistent higher highs and lows here. Also, this right here is consistent higher highs and lows, guys. See this rounding structure, which we saw like a million freaking times? See how it rounded, denied all this, so it can round back, consolidated, popped up, right? It consolidated here, just a tad bit, popped up off the ground, off of 450, popped up. Now, came to this resistance level, came down. Now we need to cross this. When we cross this, boom, it's on. Who gives a damn about the 5 year and how it looks here? We're not talking about that. We're talking about what we're dealing with right now. And if we cross this, we can get over to 2 and then start knocking down some of this and kind of let this whole little rounding structure, which some people would call a cup and handle, quote unquote. We're not looking for no freaking cup and handles, guys, on no daily time frames and all that. We're not looking for that. We're looking to cover major points. I just told you 75 points, right, that we looked at on this show, right? So damn all that other noise. Block that noise. I'm going to be talking about that tonight on my show. VLRS and I'm gone. And we'll see you guys in the middle of the week, okay? Same thing. Same thing. Look. Same thing on this rounding structure. Let me take you to the 5 so we can just kind of see what's going on. See that? This here is not like, how many times I got to show you guys this? Really? How many times? How many times I really got to show you this? This right here is not like this. I know it came up here and dropped, came up here and dropped, came up here, dropped, you know, came up here and dropped. Okay? We're looking to see if this uptrend has continued. We've seen that it rallied from 7 all the way back up here. When it hit this was the point where the stock said, all right, that's enough. Time for prices to continue on the upside. Now, prices are here. We don't know if this is this. Where the chart says, okay, hold on, wait a second. We don't know if this is this. Where the chart is saying, no, that's enough. We need to, all right, that's enough to the downside. This stock is worth more than this here now. That's it. That's enough. The market knows where to price it, and it says, all right, that's enough, guys. This stock is not fucking worth $6. I know it came down here, but that's enough. Then the market says, okay, then we'll go up. Don't argue against it. Just trade with it. Don't try to guess it. Just take the damn signal. Here it is here. So I like this for continuation. I'm doing this right now. I know I'm a little bit anti-aggressive, so to speak, but I'm doing this so everybody can understand what's going on here, okay? Because I don't want people to be confused about the process and this. Everybody needs to know how the trading process and the system, how we're doing it here. Okay? I know you guys saw Zine. Hold on real quick. Just let me make a point. Because we all about looking at familiarities in charts, okay? Look at this. Don't this? See this? Look. This little structure. And I knew this was a green when I saw it here. I started getting long on this way back here. When I saw this coming, I said, okay, it looks like we're going to evidently cross back into this and probably get through it. And then, of course, we did. Back here, look, what is this stock? Back in April, when I saw this stock, the structure on this stock, I said, it's up. When we were right here on the chart, I said, it's obvious this stock wants to come back to here. And I said, I can imagine it getting through here and just rallying back through this little whole thing here. And then, boom, look what it did. It did exactly what I thought it would. I still like Zine long. I'm long on Zine anyway, guys. But what I wanted to show you was Zine. I like Zine anyways. That's funny that I showed you that. So you guys watch Zine this week too for continuation. See this little pullback here? All these other ones match it, don't it? Doesn't it? Okay? So when this is done, you should be buying this for this to continue. Pull back, continue, pull back, continue. You should be buying this for it to do what it did here and for this whole thing to continue. Now I'm going to show you something. See this chart? Now look at something. Remember this, how it looks. Remember how that chart just looked, okay? Huh? Does this make any sense, guys? I know they're different time frames, but damn the time frames right now. I just told you, stop worrying about the time frames, dude. Don't worry about those time frames. The time frames are confusing the hell out of you guys. Don't worry about the time frames. Just go off the price action. in your time frame and what we're doing right now. Okay? Understand that. Don't this zine and this VLRS look exactly the same, just on different time frames? So if I would have saw this and I saw this, I would have said, oh, it's evident that we're going to probably cross back here. Because we already chewed the, look, exactly the same chart as zine. Damn it, ain't it? Isn't it? Exactly the same. Don't make me go back and I'm not pulling that zine chart up again. I'm not going to do that. Don't make me do that, you guys. Please don't. You know what? You guys going to make me do it. All right, you made me do it. Look at that chart and look at this one. We're learning something right now. You can't rush the learning, okay? Don't rush your learning. What does those two charts are the exact same. The exact same, you guys. Okay? I like VLRS long. I did all that just to say I like this stock long. I did all that just to say I like this stock long. These patterns and chart tendencies have a tendency to replay themselves. Because it's just human nature that is controlling these stocks. It's the human behavior of buying and selling that's controlling the price action inside these stocks. So of course these patterns are all going to look the fucking same. Because it's the same human behavior making the same signals and the same buys and all that kind of stuff that's going to make these charts all look the same. It's going to make them all do the same thing, like have a downtrend like zine, downtrend here, and then curl itself, and then pop and reverse the whole chart back. Because sometimes these stocks don't go on a downtrend for fucking ever. Okay? Sometimes they don't downtrend. Sometimes they change sentiment, change direction, a reversal in price action, a reversal. This is a reversal right here. The stock on a clear freaking downtrend stops right here, pops. How many times have we saw a stock, when you see the clear downtrend is when a stock just pops up and then starts having higher highs and lows after that? Follow this thing. Take your long on VLRS, and that's going to wrap it up for this, for Monday, and I'll see you guys back here. All right, so this is not just for Monday. Watch these stocks through August now. We rode some trends through July, now ride these trends through August. Okay? You want to have a green month? Enter a trend in the beginning of a month. Do what Jesse Livermore said and sit tight unless you get a reason to do otherwise. Okay? Buy your trend, sit tight until you have a reason to do. You might sit all the way through August, September, October, November. If you would find a reason to stay long, then instead finding a reason to sell. Find a reason to stay long and hold your profits. Find a reason to protect your profits and ride the trend instead of looking for a reason to sell. Jesse Livermore said to sit tight. Now, I'm not saying to give all your profits back, but I am saying if your profits are good, let that trend play out. Don't buy and sell and buy and sell and buy and sell. Because if you look at it, you'll say, I would have better off if I would have just bought this damn thing and just sat tight. Now, if you get whipsawed, that's a different story. Sometimes you have no choice but to take your signal. But other than that, don't buy and sell, okay? All right, so, but if you get whipsawed and you have to take profits, that's a different story. But if you enter something at 7 and it goes to goddamn it 10 and it pulls back to damn it $9, don't take your profits, or you can knock up. Don't take your whole position out. You need to have some type portion of your position needs to be able to ride with that uptrend. It needs to withstand those fluctuations. That's why when I knock off my 50 or my 75, I'm not looking no more. I set my stop and that's it. I'm not buying and selling inside of fluctuations. You need to let that trend play out. Because that's the only how you're going to let it go from 50 to 100. Okay? So I'll see you guys. We'll update the trend picture in the middle of the week. Because this is from Monday, Tuesday, Wednesday, Thursday. And then we'll be inside of August by the time we get back here. It'll be Wednesday or Thursday. And we'll take a look at the trend picture. Okay? So manage that risk. You guys look at my video over the weekend. I know it's a little bit longer than the other ones. But I had a lot of information to cram into this. And a lot of trends and especially inside of this earnings season. Buy this panic, you guys. Buy all the panic. You'll be better off buying. Don't be like the whole market's panicking right now. Buy that panic. And it's just not going off my words. Look at the charts. Buy the panic inside the charts. The charts are going to show you where the human behavior's at. So don't follow the moves in the crowd. Don't be like the guy in the left, and don't be like the guy in the left lane. Don't be like the cars in the left lane when there's 100 fucking cars in the left lane, all going the same direction, and you look to the right lane and there's not a freaking car in it, but all the two lanes are going the same direction. But you got cars in the left lane, 100 cars piled up behind each other. But when you look to the right, there's not a single car in that lane, but they both going the same damn place. And all you have to do is get your ass over in the next lane and enjoy a free ride while all these dumb shits, that's what I mean by not following the crowd. Look at this human behavior, you guys, and buy it, okay? Get into the right lane. Don't be like these dummies sitting in the left lane. Get over to the right lane and excel. Go where you need to go. Those guys are just cows. Those guys are just like pin the tail on a donkey.